Joining us right now is the founder and CEO of United Capital, Joe Duran. Joe, good to see you. Thanks so much for joining us.
Good to see you, Maria.
So we talk every morning about the possibility that tax reform gets done in 2017. How important is this for markets?
I think it's incredibly important. The market is fully priced. It's pricing in things happening. And when you look at the hard data we're seeing, it's really not justifying the valuations we're seeing. And what you expect is that we're going to get some progress made. And the noise about Russia just defers everything, which might be the global plan that the Democrats have, is to really stall out everything so that people can say, well, then nothing was accomplished.
That's absolutely right.
We do need something to happen, most especially on corporate reform on taxes, because that's what is priced in to justify the valuation. If you get more growth, get higher earnings, you're going to justify these valuations. If not, we're going to see rates low. And I think we're today trending closer to the 1.8 to 2% Fed target than the 3% that the administration would like to see. So it's not great if something doesn't progress.
Joe, with stocks near record highs, though, the 10-year Treasury yield is below 2.2%. Is that telling us that we won't get a pro-growth agenda?
I think that's exactly what it's telling you. What you're seeing right now is that Europe is doing really well. The reason the S&P is doing well is large companies that are benefiting from international growth, where it is better. Europe is coming off a very serious slump. The emerging markets are coming back. What we're seeing is that the S&P is doing well, but what the Russell and the interest rates are telling you, and the dollar, is that the U.S. needs something to happen in order to accelerate growth. That's all the indicators are telling you. And the bond market tends to be smarter than the stock market about the economy.
They're bigger warriors than stock investors, fixed income investors.
But I don't want to discount the fact that the first quarter had some pretty strong earnings. We had profit growth of 15% in the first quarter. We had revenue growth of 8%. That's without any policy. Well,
the global recovery is real. What you're seeing across the globe and why large companies are doing great, what you're seeing is you would expect with the original Trump administration that small caps would do well. You remove regulation, it's great for small companies. It should be great for the dollar. What you're seeing is all of the indications are Trump administration's goals are being deferred, and all the growth is happening in the rest of the world.
After the election, well, the big surprise was how well the small caps did in anticipation. Do you see signs then we're becoming like Europe, where the big companies grow, but the economy as a whole gets stuck at 1.8, 2% range?
I think that's what we're seeing, unless something happens. You know, again, if you have some reforms that help to remove regulation, and a lot of that is actually happening. If you drop the cost of capital, if you make taxes less of an issue. Remember, big companies take advantage of the tax benefits of going offshore or writing off capital expenses. Small companies don't have that luxury. They don't have the flexibility that large companies have. So most of the tax benefit comes to small companies, not big companies.
You know, I think this is a really important point that you're making. And Steve, I want to get your take on this, because if you've got most large companies taking advantage of all the loopholes all the time, is a 25% corporate tax rate, could that be a tax increase for some companies?
Depends on what deductions you remove. And this is why the danger of the delay, keep delaying this tax bill, is that they'll do a default position, say we can't do real tax reform, let's chop a few points off of the tax rate and call it a day. So if they go to 25, I think most companies will get a reduction because they're not going to do real tax reform.
As long as they get rid of the deductions, yeah.
But the key thing is get that rate down to 15% and allow expensing of capital expenditures and make it easy to recapitalize or repatriate capital that you've parked abroad because you don't dare bring it home at a 40%, 35% tax rate.
But you might at 10%.
Well, even there, it would be better than what we have now.
I know.
But why is the market held up? You say it's just the S&P 500 that's held up. The rest of the market is wobbling because they see strong
There's a lack of alternatives, right? We have lots of clients all over the country, and they're looking for yield. So where do you go? You know, when you have a 2.2% 10-year bond, there's nowhere to go. Most individuals' wealth is tied up in their home. So when their home values are going up, which they are because interest rates are low, they feel wealthier. They spend money. And so things are fine. They're not great, but they're fine. And frankly, the markets have not had a decline of 10% or more in 9 years now. It's an unheard of low level of volatility. People are pricing in continued low levels of volatility, which makes them tilt higher to the risk spectrum. And that is the concern, of course, because we're pricing in a level of stability that is unusually
Do you urge clients keep a lot of cash on the side?
No, because again, the alternative on cash is you get eaten alive by inflation. So what we say is, look, you need to be diversified. You need to constantly assess that you haven't shifted out of your core allocation, and you want to be everywhere so that you take advantage of what's happening in the emerging markets.
One quick final thing. We're ever going to get rid of that fiduciary rule?
Look, all of our clients, we're under the fiduciary standard. I can't imagine why there's a debate about it. I think that everybody should be held to a fiduciary standard. We're responsible for what we do for our clients, and I can't imagine why it's a debate.
And fees, are they going to be whacked more and more?
Fees will continue to go down, and that is because the technology is really helping us to do things more efficiently. We see what firms like Vanguard and BlackRock have done to drive down pricing.
Sure.
It's going to come to the advisory world as well.
Yeah, everybody's got to keep up with Vanguard. It's pretty incredible. Joe, great to see you.
Great to see you.
Thank you so much for joining us this morning. Joe Duran from United Capital. The